What should interest rates be before I buy a home? Over the past year or so, mortgage interest rates have gone up. So, is it wise to buy a house now with how high the rates are? What should rates be at before you buy, and how long should you wait? My name is Grant, and I have been in the mortgage industry since I was 19. And I've used some of that experience to grow what is now Stewardship, a number of different companies that has become an Inc. 5000 fastest growing company in America. Some people call me a financial expert because I have a whole bunch of licenses, but I'm a normal person who needed to make a decision on where to live when I got married. My wife and I, we bought our first home in 2006, literally the worst time possible. I was in the mortgage industry, so I had an intimate knowledge of what interest rates were at and what was going on in the market. As a matter of fact, I knew that interest rates for mortgages were in the fives for a period of time, but when I closed on this home, here are the actual mortgage documents. My first mortgage APR was 7.207 and the second mortgage 8.330. So here we are. We're newlyweds, about to purchase our very first home, and we're agreeing to sign 2 mortgages at interest rates that are much higher than they previously were. And I knew it because I was doing home loans as a career, as a profession. Now, after sharing this with you, you're probably thinking 2 things. Dang, those interest rates are high. Or, you purchased in 2006 right before the housing market crashed. I bet that messed you up financially. It's true. Those rates are higher than the current mortgage rates of today, and the housing market crashed within a few years of my wife and I purchasing that home. But this home purchase ended up being one of the best financial decisions we ever made. It fast-tracked our wealth-building journey and created for us stability in our life on multiple levels. Not only did it provide for us a place to start our marriage, raise our 3 babies, have a place to host parties with friends, even have a room for visiting guests from out of town, it also gave us a fixed housing payment that easily fit into our budget and didn't change in a crazy housing economy, and actually gave us some immediate equity that we tapped into to help start my business. That growth, that business, that income, that wealth building was made possible because of the purchase of this home, even though the interest rates were high and it was at a bad time in the housing market. So what does that story have to do with answering the question, what should interest rates be at before I buy a home? The answer? Don't worry about the rate. Worry about the payment. The key part of my story that you may have missed is when I said the home purchase provided for us a fixed housing payment that easily fit into our budget. This is huge. When rental rates were increasing and most people were freaking out about housing, we had a fixed payment that we knew was not going to change, and it was well within our means. It created for us stability, peace of mind, and so much more. And that peace of mind stuck around through the housing crash, even when we were upside down, because we could still afford the payment. Was the interest rate high? Yes, especially compared to what rates were at a few years before, and even where rates are at today. Did the housing market crash shortly after purchasing that home? Yes. But without the purchase of that home, we would not have the marriage, community, business, or wealth that we have today. The key to making a wise purchase of a primary home has nothing to do with timing the market on rates or home values. It has everything to do with finding a floor plan, a neighborhood, and payment that fits your goals. Don't focus on rate and home values. Focus on the home and the payment. And being a financial expert doesn't mean I'm immune to interest rates, markets, and the emotions that are involved with this entire home purchase process. And another thing, because markets and economies change, that means that interest rates that are available to you can also change. Sure, I bought the house, but I wasn't tied to or buying the rate. If you buy a home and interest rates get better, it's not like you missed out on an opportunity. In most situations, you too will be able to refinance out of that higher interest rate into a lower interest rate with an even lower payment. What interest rates are or what's going on with the housing market shouldn't determine when you buy a home. Your income, your career, and your family situation should. But how do you know you'll be ready when your time comes? A home buying game plan. And if you're in Arizona and you want one of these free game plans, check out this webpage. It doesn't matter if you're 3 days or 3 years away from buying a home, a free home buying game plan will make your home purchase better when your time comes.